Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know, first, SpaceX's record $1.75 trillion IPO filing aims to raise $75 billion, fueling a space-based AI future despite national security hurdles. We'll analyse why this record valuation is a turning point for private space companies and how it could affect national security policies for critical tech. Second, Jony Ive, the original iPhone designer, partners with OpenAI's Sam Altman to build a screenless AI device, challenging Apple's smartphone dominance. Today we'll take a closer look at this bet against screen-based interaction and its implications for the future of personal computing and AI hardware. Third, Intel bets $14.2 billion to reclaim its Irish fab, positioning for a CPU renaissance as CPUs become the new AI bottleneck. We'll explore how this massive bet on a CPU-centric future could transform the AI hardware market and upcoming data center architectures. Fourth, after a $320 million blockbuster flop, Netflix's franchise-building strategy is under fire, highlighting its struggle to compete with Disney's flywheel model. In this episode, we'll break down the conflict between Netflix's data-driven model and Disney's franchise strategy and what it signals for the streaming wars. Fifth, Amazon's $9 billion bid for satellite firm Globalstar to challenge SpaceX's Starlink hits a wall. Its rival Apple holds a key stake. So we'll discuss why this acquisition is critical for Amazon's Project Kuiper and what it means for the geopolitical landscape of satellite communications. Let's start with a story that caught everyone by surprise. Elon Musk's SpaceX has confidentially filed for an IPO, and the numbers being reported are an absolute bombshell. We said to watch for this after the XAI tie-up. Now it's here, and the scale is even larger than we anticipated. The company is reportedly seeking a valuation of $1.5 trillion. So where does that almost unbelievable number come from? This isn't just about rockets anymore. A huge piece of this valuation is propped up by the incredible growth of Starlink, SpaceX's satellite internet division. Public filings will need to show how Starlink's subscriber base has absolutely exploded, rocketing past 10 million users in early 2026 and is on track to bring in as much as $22 to $24 billion in revenue this year alone. Even more staggering, SpaceX is looking to raise up to $50 billion. To put that in perspective, it would be more than 3 times the size of the biggest US IPO to date, smashing the $22 billion record set by Alibaba in 2014. This all comes after SpaceX merged with Musk's other venture, XAI, creating a combined entity valued at approximately $1.25 trillion. That tie-up wasn't just financial theatre, it created a shared hardware stack that, for now, still leans hard on NVIDIA. This is where the situation takes a more complex turn, because this isn't just a financial maneuver. The real synergy here is a vision straight out of science fiction. The plan is to use SpaceX's reusable rockets to launch a new generation of Starlink satellites that are essentially data centers in orbit. These orbital data centers would be powered by continuous solar energy, aiming to solve the massive AI energy crisis here on Earth. This is the grand strategy, merging rocket technology with AI to build the future of computation in space. If the SpaceX IPO is successful, Elon Musk will become the first person in history to lead 2 separate publicly traded trillion-dollar companies, with Tesla already boasting a market cap of around $1.5 trillion. But that's not the whole picture. There's a massive hurdle standing in the way of this record-shattering debut, because SpaceX is a critical contractor for NASA and the US. Military going public opens it up to foreign investment, raising serious national security alarms. We're already seeing US senators expressing concern, and it's very likely the government will impose new restrictions to protect its sensitive launch technology. An IPO expert from Georgetown warns that even a great company can flop if the markets have turned south. And right now, markets are volatile. This volatility is critical because SpaceX operates on very long-term, high-risk timelines. Think about developing Starship for Mars colonization that takes decades and billions of dollars. Public markets, on the other hand, demand short-term quarterly profits. This creates a fundamental conflict. SpaceX will now have to balance its visionary projects with the immediate demands of a huge new base of public shareholders. The core conflict is clear. The unprecedented hype and colossal scale of the SpaceX offering are going head-to-head with a deeply uncertain market. Still, Experts anticipate a massive wave of interest from everyday investors. As one analyst put it, it's not like 5 other companies like this will go public in the next 5 years. For anyone who wants more exposure to Elon Musk, this is their opportunity. Speaking of visionary companies and trillion-dollar valuations, let's rewind the clock to a moment of panic that created one of them. While one CEO was publicly laughing off the iPhone, BlackBerry inventor Mike Lazaridis was having a moment of sheer panic on his treadmill. As he watched the iPhone's introduction, he realized Apple had just put a full web browser on a phone. The next morning, he told his co-CEO the devastating truth. The carriers aren't letting us put a full browser on our products. The situation presents a fascinating duality behind their failure. On one side, they were trapped by carrier deals. On the other, they were strategically committed to physical keyboards, completely underestimating the desire for a full screen experience. And their main rival, Nokia, was running an operating system called Symbian that was built on an outdated foundation, making it incredibly difficult to support a modern touchscreen. They were caught in technical debt. They couldn't escape. While Microsoft's Steve Ballmer famously dismissed the iPhone as too expensive in private, the competition knew the game had been upended. The first iPhone was full of limitations. It couldn't even copy and paste. But Apple's strategy was to turn limitations into opportunities, ruthlessly cutting features to perfect what remained. The most important feature wasn't the phone. It was the breakthrough internet communications device. Competitors rushed out phones with long lists of unpolished features, betting against Apple's minimalist approach. They all failed. The iPhone changed Apple from an underdog luxury brand into a global titan so dominant that it, quote, literally ran out of people to sell iPhones to. When you can't sell to new people, you sell more to the ones you have. That's when the new conflict began. Apple turned its focus to services, enforcing its infamous 30% App Store fee. The strategy produced ever higher earnings, but it also created a new dynamic where developers feared Apple's review process. Now, get this. This shift to services had a massive side effect that you've probably felt in your own wallet as developers were pushed toward freemium and subscription models to survive. This has led to what some call subscription fatigue for consumers. The iPhone's sheer scale has warped the entire world. It created a manufacturing base in China so massive and so perfected that even Apple is struggling to replicate it in places like India. The iPhone also succeeded by commodifying core components, and interestingly enough, this means the powerful technology once exclusive to the iPhone is now cheap and everywhere. This has led to a flood of low-cost, insecure smart devices and a massive electronic waste problem. Finally, the iPhone put a camera in every pocket, forever changing media and culture. And today, as the AI boom has everyone scrambling to build the next big thing, Apple remains unfazed. According to top executive Greg Joswiak, rivals are just making accessories. His words, they don't have an iPhone, and so they're scrambling for what to do. A lot of what they talk about ends up being accessories for an iPhone. Here's the fascinating paradox, though. While Apple's current leadership seems confident, the very man who designed the original iPhone, Jony Ive, is now collaborating with OpenAI's Sam Altman on the next breakthrough device. They are building a simple, screenless AI device designed to be calm and intuitive. They are betting that removing the screen could be the next great limitation becomes opportunity moment, a direct challenge to the very paradigm the iPhone created. From the future of devices to the components that power them, seemingly backward-looking move by Intel might actually be a glimpse into the future of AI hardware. The company just spent $14.2 billion to buy back something. It sold for $11.2 billion just 2 years ago. Just 2 years ago, Intel sold off a 49% stake in its critical chip factory in Ireland. Now, they're buying it all back at a $3 billion premium, paying $14.2 billion. What really brought this to a head was Intel's strategy, something they call smart capital. By selling that stake, Intel got an $11 billion cash injection without traditional debt, de-risking a massive investment. That $3 billion premium they just paid, think of it as the cost of a very large, very flexible loan that gave them the breathing room they needed. The answer lies in a quiet but seismic shift happening in technology. While the world has been obsessed with GPUs from companies like NVIDIA to power the AI boom, a new reality is setting in. In a stunning admission, NVIDIA itself recently told reporters that CPUs, or central processing units, are becoming the bottleneck. This is crucial because the first wave of AI was all about training enormous models, which is what GPUs are perfect for. But the next wave is what experts are calling agentic AI. Imagine thousands of smaller, specialized AI agents all working at once, reasoning and completing complex tasks. This requires a processor that can manage countless simultaneous environments and has incredible single-thread performance. That's the classic job of a CPU, and right now, they're getting overwhelmed. And it goes deeper. The Futurum Group dropped a prediction. By 2028, the growth rate of the CPU market could actually exceed the growth of GPUs. This is being called a CPU renaissance, driven by new forms of AI that require immense general compute power. This is where Intel's multi-billion-dollar gamble comes into focus. The Island factory they just bought back is a production hub for their server CPUs, including the latest Xeon processors. And this isn't just any factory. It's Fab 34, one of the most advanced in the world and the first in Europe to use cutting-edge EUV lithography in high volume. By consolidating control here, Intel is securing a critical foothold in the European Union and diversifying its manufacturing away from geopolitical hotspots. Intel is going all in, re-seizing control of its manufacturing at the exact moment the market is realizing it desperately needs the very chips that have always been Intel's core business. This is the bottleneck, migrating in real time, and Intel is positioning itself at the new choke point. Intel is betting billions on hardware, but over in the world of content, Netflix is also making some massive and very risky financial bets of its own. Believe it or not, the company was once ready to spend a staggering $72 billion to buy the rights to Harry Potter and Game of Thrones. That the deal fell through highlights a massive vulnerability. To understand why, you have to see that Netflix and its rivals are playing two completely different games. We're seeing Disney build franchises with a curated long-term approach, creating interconnected universes like Marvel or Star Wars. At the same time, Netflix is using a data-driven strategy of quantity and diversity, using algorithms to make a massive amount of content to ensure there's something for everyone. It's a strategy of broad appeal versus deep loyalty. And that race to build its own franchises is proving to be incredibly risky and expensive. Case in point, a film called The Electric State. Netflix hired the star directors from the Avengers movies, cast Millie Bobby Brown and Chris Pratt, and spent a jaw-dropping $320 million. The gamble of giving that kind of creative freedom and budget to star directors did not pay off. The result? Critics savaged the film, with one calling it a bogglingly expensive dud that lacks any sort of spark. It scored a dismal 15% on Rotten Tomatoes and quickly plummeted out of the Netflix top 10. Plans for sequels and spin-offs simply evaporated. This isn't an isolated incident. The company dropped a reported $700 million for the rights to Roald Dahl's catalogue, an investment which, after 5 years, has yet to produce a major hit. This highlights the core debate for Netflix. Is it better to buy or build? But here's the twist. While expensive planned blockbusters can fizzle, sometimes the biggest wins come from where they are least expected. A surprise animated film called K-Pop Demon Hunters became the most watched movie ever on the service. The success was so unexpected that it reveals a huge weakness in their game plan. This movie was a monster hit with over 500 million views, and its main song even hit #1 on the Billboard Hot 100. But because Netflix has a reactive wait-and-see approach to merchandise, major toy makers didn't even have licensing deals until after the movie was a smash. The consequence was a massive missed opportunity. The toys completely missed the holiday shopping season. It's a mistake a company like Disney, with its famous integrated flywheel approach, would never make. Now, armed with a $2.8 billion windfall from that failed Warner Brothers deal, Netflix is doubling down. It's pushing forward with new versions of Narnia and a live-action Scooby-Doo. After failing to buy the world's biggest franchises, Netflix is now locked in a high-stakes, multi-billion-dollar race to build them from the ground up. Speaking of competition between giants, another major battle is heating up, this time for control of the sky, and it's pulling in some of the biggest names in tech. Two of tech's biggest rivals, Amazon and Apple, are being forced to the negotiating table over a $9 billion deal. Amazon is reportedly in talks to buy the satellite company Globalstar for that staggering $9 billion figure. The goal is to supercharge its low Earth orbit satellite internet initiative, Project Kuiper, and mount a serious challenge to SpaceX. However, if you zoom out, you'll see another layer of strategy at play. This isn't just about buying more satellites. It's a strategic move to acquire something much more valuable, licensed radio frequency spectrum. Think of it as real estate in the sky. Globalstar holds exclusive rights to a key band of spectrum that is incredibly difficult and time-consuming to get approved by regulators. For Amazon, this isn't just buying a company, it's buying a massive shortcut. The real turning point, however, is that Apple owns a 20% stake in Globalstar. That means for this deal to go through, Amazon has to get its longtime competitor, Apple, to agree. This isn't a simple acquisition. It's a high-stakes negotiation between three of the most powerful companies on the planet. And this connection isn't just a casual investment for Apple. The company poured over $450 million into Globalstar's infrastructure to power the emergency SOS via satellite feature on iPhones. That's a critical safety feature Apple has heavily marketed. If Amazon takes control of Globalstar, it would essentially control a key supplier for one of the iPhone's most important features, giving Apple massive leverage. The reason for Amazon's aggressive move becomes clear when you look at the numbers. Project Kuiper currently has about 180 satellites in orbit. Its target, Elon Musk's Starlink, operates a network of more than 9,500 satellites, already serving over 9 million users worldwide. This isn't just a competition, it's a race where Amazon is desperately trying to make up an enormous gap. For Amazon, this isn't just about providing internet to rural homes. A satellite network is a massive strategic advantage for its entire empire. Imagine an unbreakable logistics network where every truck, plane, and warehouse is constantly connected. Or think about Amazon Web Services offering high-speed cloud access to customers at the literal edge of the world. The rabbit hole goes deeper. SpaceX has confidentially filed for what could be the largest stock market listing on record, with analysts estimating much of its potential $1.75 trillion valuation will be driven by Starlink. Amazon's $9 billion play for Globalstar is a massive, high-risk gambit in a trillion-dollar battle for control of the sky. Ultimately, the stakes are higher than just corporate profits. Starlink's role in the war in Ukraine proved that these low Earth orbit satellite networks are now critical pieces of geopolitical infrastructure. The rise of a second major US-based network, controlled by Amazon, changes the entire landscape. It gives the US government a vital alternative, reducing its strategic reliance on a single private entrepreneur. This is about national security and projecting power, all disguised as a battle for better broadband.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.